Mayuresh Joshi joining us on the show right now. A very good afternoon to you, Mayuresh. Not looking like a great afternoon when you look at the markets and the print on the screen. We are sub the 24,500 mark for the Nifty. Broader markets is where the pain is pretty sharp, and it's all the sectors that are in the negative territory. But one of the stock that is holding out in this sort of a market is ICICI Bank. While one end of the market, you have ICICI Bank that is holding on to the positive territory. You have IndusInd Bank that's hit a 52-week low on an intraday basis today. What's your take when you talk about the banking space as a whole then?
Afternoon. So two things. One, I think the numbers for most banks, specifically the larger ones, have been pretty good. Axis Bank gave a good set of numbers. HDFC Bank, good set of numbers, and the commentary was equally encouraging. Kotak had their one misses in the numbers itself, so quite a few one-offs in the numbers. Expectations that as rate cut cycle starts in India as well, some element of positivity expected to come through. So I think the larger banks have delivered. In fact, the mid-cap banks have also delivered. Karur Vysya Bank has given a good set of numbers. City Union Bank yesterday has given a good set of numbers, and a few of the PSU banks have given a good set of numbers as well. So again, I think the entire apprehension that was surrounding the BFSI space in terms of how deposits will grow, whether there'll be incremental pressures in terms of asset quality, whether there'll be compression on NIMs and spreads, that has largely not happened, at least in Q2 numbers. And commentaries seem to be pretty sanguine when it probably comes to the second half and the next financial year as well. So again, selectively, a clutch of these large and mid-cap banks is something that can continue doing well, looking at how the results have played out. Obviously, I think with the rate cut scenario, how deposit mobilization takes place is going to be extremely critical over the next couple of quarters, to say the least. But a large part of the banking universe is well capitalized, asset quality pressures under control, provisioning has been done adequately onto the balance sheet, and therefore additional stress coming through seems minimal. The expectations in terms of NIMs compressing significantly seems minimal at this juncture, and valuations and price action probably remain in their favor. So yeah, I think we continue holding banks like an Axis, an ICICI, a Karur, a Bank of Baroda, a Bank of Maharashtra in our global portfolio.
Okay, so some of the banking names have come out with better earnings. Numbers for SRF just hitting the screen, and as far as the revenue from operations is concerned, it's very sideways. 3,424 is the consolidated revenue from operations, and that compares with 3,464 that they delivered last quarter. The profitability this quarter has actually dipped. It's 201 crore that they've reported versus 252 crore last quarter. So there seems to be a bit of an operational miss coming in, because this is despite the other income staying steady at 33 crore versus 25 crore. So there has been a jump up in other income, but overall the profitability has come down. The taxes have also actually gone down, the tax expense. So there's a clear miss when it comes to the operating performance, and that's the reason that stock is coming under pressure right now. So revenue down about 1.2% quarter on quarter. It's the profitability which is lower, and those are the red bars emerging on SRF. No surprise with the kind of market mood that is. And of course, we have seen very, very sharp reactions to any negative earnings. In fact, Mayuresh, FMCG has the pack, has reported weaker than expected earnings, whether it was Nestle for that matter, whether it has been a couple of other companies, DMart, etc. as well. Having said that, Varun Beverages today is holding up. In fact, in an otherwise weak market, that stock had taken a bit of a knock when the numbers had come from, but from there it has been inching higher at the highest point of the day. Have you looked at Varun Beverages specifically?
Afternoon, Anisha. Yeah, specifically, yes. And I think if you look at the numbers and the internals, they are pretty strong. So if you look at the 9-month comparison for this financial year, obviously take the calendar year into consideration. For 9 months calendar year, FY25, 24 and FY23, they've already done around 909 million cases, India and their overseas operations combined. For the entire periodicity, they will exceed the numbers that they did last year. Margins have been very, very stable at 24 odd percent, and they might stay in this range of 24 to 25. The expectations in terms of debt equity staying stable at 0.6 by 0.7 also seems to be a plausible base case scenario, because I think a large part of their capex has largely been done. the mix between their products, carbonated drinks at around 65-70 odd percent. You've got water, which is around 25, and then you've got your health drinks, including juices, at around 5 odd percent. So I think they've got a very healthy mix. The expectations in terms of volume growth should continue remaining extremely strong. Obviously, the depots that they probably manage, the own fleet that they've probably got at 2,500 odd units, that augurs well in terms of the entire internals, in terms of how they manage their operations. And therefore, it's been a very strong show. I think they have been continuing to do this, Anisha, over the last few quarters. And this quarter has been no less. Yeah. So anybody holding should continue holding Varun Beverages.
All right, so anyone holding Varun Beverages, continue holding this particular counter. There's another stock actually that would like to pull up. It's the Avenue Supermart. That particular counter is holding on to gains in otherwise weak market today, while the rest of the market is just caving in. There you go, Avenue Supermart just holding the fort, just in that positive territory, about 0.7% or so. Yesterday, we spoke to Milind Karmarkar, who spoke about Avenue Supermart and Trent in particular, who believe that both of these counters or both of these companies were still in their youth phase. There is scope for further upside on both of these counters going ahead. In fact, let's hear out what Milind Karmarkar had to say in that exclusive interview with us.
When you're looking at these businesses over a longer period of time, like I was just some time back, I was looking at Trent. So from 2002-3 to 2007-8, it went up 10 times. But it was not the greatest stock during that time, because we had Voltas going up 60 times and all the engineering stocks going up 60-70 times. Now 2007 to 2010, it again grew by about 50%. But from 2010 to 2016, it did not go anywhere. It gave a return of CAGR of, if I'm not mistaken, about 8-9%, which was significantly lower than the market. So you have to, so in any business, there is a, if you see, there is a life cycle. So initially, it's initial phase like a startup. Then there is a growth phase. Then people start realizing that, oh, this business is likely to do well. Money starts pouring in case they don't want money. But as long as the business keeps innovating, I think the growth will continue. But of course, it's life cycle. So at a time, it will sort of mature and start delivering big cash flows, but low growth. And then, like most of the FMCG companies, that's what has happened, that they are delivering large cash flows, but less growth. And then for now, that phase can continue for a long period of time. And after that, it's a demise. So I think that is what happens for each business. So nothing different. So ideally, you should be invested when the growth phase is there and continue to hold till you think that the business is mature.
All right, so that's Milind Karmarkar's take coming in on Avenue Supermart as well as Trent. And also he did say the fact that he expects the brick and mortar traditional retail operators to actually coexist along with quick commerce space. And what's your take, Mayuresh? Do you concur with that view that despite the way how quick commerce is taking the market by the storm, the brick and mortar players will continue to survive and thrive?
Yes, they would. And I think the entire concept, as they call it, physical and digital, I think a combination of both these aspects are extremely critical for a growing economy like India. Obviously, I think everybody's got access to data at this juncture, but a large part of the Indian consumer market still resides in tier 3, tier 4 cities and rural areas as well. And therefore, I think the touch and feel option that still persists in a lot of regions within the hinterland will still continue. Obviously, I think a lot of these players, whether you talk about FMCG companies, whether you talk about paint companies, whether you're talking about the banking universe also, I think a lot of the consumer discretionary sections of the market are expanding their direct reach. They also have a mix of e-commerce. They are having a mix of digital. I think a lot of urban consumers prefer digital and digitalization in terms of all these facilities that are probably given out to them. And therefore, I think an appropriate mix is absolutely necessary. Take instance of the banking system also. HDFC Bank has been adding physical branches continuously over the last few quarters. And I think that is where the differentiating factor probably becomes. Have low employees or less employees probably kept in. Use digitalization to probably ensure your operating costs become optimal. But I think this model will survive in an economy like India.
Taken. Mayuresh, where else are you finding value on the table? You talked about some of the private, banking names like Axis, etc., which you have in the portfolio. Anywhere else that you would use this opportunity to buy on dips?
So Anisha, again, I think we are constantly monitoring. I think a lot of these ancillary players. So real estate ancillary stocks is something where our belief is there can be a decent amount of volume stroke price growth as well. So I think the entire operating leverage thesis should play out meaningfully in terms of stability of earnings over the next few quarters. So Greenply Industries is one stock which we probably kept on our radar. Obviously, it's corrected with the market today, but it should show some element of price strength coming back. And as that happens and if earnings support that, I think that can be a good, credible story going forward. Obviously, I think a lot of these domestic cyclicals is something that we're keeping on our radar as well. Cement as a subsector, you've seen one acquisition probably happen today, but there's a lot of consolidation happening within the industry itself. Expectations in terms of stability of pricing should remain a monitorable constant. And as this scenario improves with growing demand and input costs remaining stable, a lot of the captive power being used internally or being created internally reduces a lot of internal and input costs for a lot of these cement players as well. And therefore, operating leverage should start picking up very, very meaningfully. So I think apart from Ultratech, JK Cement, Ambuja is something that we've kept on our radar as well. Last but not the least, I think a few of these infra companies as well. So our own sense is that selectively the Welspun Group, as an example, they are into roads, they're probably into waste and water management, they are into the gas pipeline business, both Welspun Corp and Welspun Enterprises as an example. They can continue doing well with good order books coming their way. They are executing well. The expectation in terms of working capital cycle and debt levels remain in control. And therefore, this entire thesis of earnings remaining constant for a few infra companies, cement companies, a few of the real estate ancillaries probably are some of good areas where earning stability can continue remaining stable and strong.
The view coming in as far as the market is concerned, and the Welspun Group, which you like at this point of time, at least select names from that. But overall, it's Zomato for which we're expecting the numbers to come by. Paytm had come out earlier in the day. It was operationally okay, but Zomato is down. Actually, it's seen a bit of a spike in the last few minutes, and it's been volatile because the numbers are expected any time now, and just ahead of that, there is a bit of a volatility. We'll take it across to Snehi to get more sense as to what the expectations are from the number. But before that, let me take it across to Ansh to get better understanding of what's happening in the market, because it's the broader markets which are reeling under pressure. Any insights there, Ansh, from the market texture?
Right, so both mid-cap and small-cap has actually touched its 2-month low today. But if you see on monthly chart, on monthly basis, then starting with mid-cap first, mid-cap has drawn by around 6.5% for the month, and it has formed a bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. Also, index has snapped its 6-month gaining streak, and this is the biggest single monthly decline in at least 2 months. Now, if we talk about a monthly basis, then there are almost 85 out of 100 stocks are trading in red in the mid-cap index. If we talk about top losers, then we are seeing that IGL, L&T Finance are down by more than 20%, whereas MRPL, Vodafone Idea and Bank of Maharashtra are down by 18 to 19% on monthly basis. Now, if we talk about small-cap index, then like mid-cap index, small-cap index has also been declining for second consecutive month, and it is down by around 5%, actually more than 5% on monthly basis. And if we talk about top losers for small cap index, then we are seeing Manappuram Finance, HFCL, Mahanagar Gas, NBCC and IFCI, which are down by more than 15% on monthly basis.
All right, so that's the broader market performance coming in. But Kunal, I would like to ask you everyone's favorite question now. What next for Reliance Industries? Because it's more closer to its 52-week low than it is closer to its 52-week high level.
Yeah, and I think the last 1 week or 10 days has been quite brutal for the stock, because what it has done is in the process of this 300 to 400 point odd correction from 3100 mark, which started off for Reliance from the second half of the month of September. I think the stock has managed to give two major breakdowns, and on the technical front. One is of course the break below its 200 moving average that happened, I think the last day of the month of September, the first day of the month of October for the stock, when it managed to break below the 2900 mark. So that's one critical data point. We've seen historically that whenever the stock has managed to break below the long-term averages, and with that too with a gap down opening, and that gap has not been filled. It's acted as a zone of major resistance for the stock to come by for months on a trot. And the second, the more critical part is that the stock is now showing the incidence of a death crossover on the technical terms, which indicates that the 50 DMA has crossed below the 200-day moving average for Reliance Industries. Again, I think in both these cases, we've seen historically that the stock takes some time to try and form a major bottom for itself. But in the process of the stock forming a bottom, there could be a phase where the stock gets into a corrective or further corrective mode. So at least the good part is that the pace of correction, which was very intense in the first week of October, that pace is not getting replicated so far for the stock. But nevertheless, the downtrend or the initial or the move on the downside is still continuing for Reliance Industries. So maybe another 150 odd points correction for the stock could be in the offing in case if the market gets into a further leg of correction.
Further leg of correction, hopefully not. At least if you're a bull, that's the view coming in. But for now, we continue to drift lower. There's a bit of a recovery, very, very small one at that, but we'll take what we get at the moment. Let's see what we get from Zomato today. The numbers are expected any time over the course of next couple of hours. Let me take it across to Snehi to get a sense as to what the expectation on the street is. Snehi.
If you take a look at what the street is penciling in, largely it's a good set of numbers that we're expecting for Q2 this time around. Let's take a look at these numbers on a consolidated sequential basis. Revenue is expected to grow at 10% QOQ. 4,681 crores is what we're expecting this figure to look like compared to 4,206 crores that we saw in the first quarter. EBITDA also expected to go up by 20% sequentially. 209 crore rupees is what we're expecting the EBITDA figure to come up to versus 177 crores. Now PAT, however, we're expecting to see only a 3% sequential growth on this front. PAT is being penciled in at 260 crore rupees compared to 253 crores in Q1, and the EBITDA margin also slight expansion is what we are seeing here at 4.5% compared to 4.2% in Q1. Now here are some key expectations that we are penciling in for Zomato's numbers. Food delivery, the segment is likely to post 7% QOQ GOV growth. You have strong performance that's expected from Blinkit, because Blinkit is also expected to post 15% sequential GOV growth, and the sequential margin improvement can be expected to be seen in the food margin as well as the Blinkit business. Here are some key monitorables that we'll be watching out for keenly in tomorrow's results. Market share gain or loss in the food delivery business is going to be an important metric to watch out for. Order volume growth in the food delivery business is also going to be another important monitorable. Delivery charges expansion in the food delivery business will be a key monitorable, and near-term EBITDA trajectory will also be important to watch out tomorrow. However, when you should focus to Blinkit, the net dark store addition for Blinkit is also going to be a very important metric to watch out for in tomorrow's management commentary. But well, yes, all in all, a good set of numbers is what we are expecting for Zomato tomorrow.
Okay, today is when we are expecting Zomato's numbers, so we'll watch out for that in the next couple of hours itself. For now, the stock volatile, and so is the case with the market as well. Fairly volatile at the moment. It continues to be the same names. Actually, PNB is down 7%, MRPL is down 7%, HEG, SJVN. So a lot of these PSU names are actually coming under pressure. Mayuresh, what's the view as far as PSU basket is concerned? Would you hazard a buy here, or let it settle, let the entire volatility get out of the system?
I think it would be an appropriate choice for the volatility to settle, Anisha. But I think PSU banks seem to be a little bit more comfortably placed. Numbers have been reasonable. The expectations, again, in terms of the legacy accounts that they probably carry, would ensure that the deposit growth continues for these banks. Again, well capitalized, a large part of the banking universe, specifically the larger names and the within the mid caps, the largest mid cap names as well. Last but not the least, because their provisioning has been so elevated, any write-offs and recoveries and the write-offs that they've probably done in the past, any recoveries thereof will incrementally add directly to the bottom line, which probably means that there might be a ROE improvement as we head into the next few years as well. EPS RS rating, institutional holding, as we see in cancelling, remains very, very strong. So Bank of Baroda, Bank of Maharashtra seem to be well placed. Defense names, Anisha, I think they've corrected quite a bit. So I think we are keeping our eyes and ears open now. If they correct further, our own sense is that the tailwinds and the structural story still persists. They've got decent order books. They've been executing well. There does not seem to be a case that their execution might probably go off track looking at the target setting that the ministry has probably given them. And therefore, I think we are very, very selective when we're keeping a very close eye on these PSU defense names. And if they correct further and if they make good bases at lower levels, maybe we'll initiate coverage on a few of these names with management.
Yeah, it wouldn't be a bad idea to take this opportunity to initiate coverage on some of these names for now, being on the sidelines and tracking what's happening in the market very, very closely. That's all you can do, to be honest, in a market like this. You can't catch a bottom, and definitely it's not a good advice to try and trade in this kind of market where the volatility index has spiked on an intraday basis. Where are we on India VIX right now? I think we were above the mark of 14 the last time I looked at it. Right now we are very close to that 14.5 mark, so 5% higher as far as India VIX is concerned. And it's the broader markets which is coming under pressure. Let's pull up the mid cap and small cap indices yet again and see whether there has been a bit of a recovery there or not. No, not at all. The mid cap index continues to be under pressure at the lowest point of the day. And look at the small cap index, almost a 4% cut coming in on an intraday basis. Individual names and the list can actually go on of the losers. So why don't we start with the gainers, because there are only a handful of those. City Union Bank gets a thumbs up with the kind of result reaction coming in. Polymed is the other one with that 3% gain. Varun Beverages, the commentary from the con call seems to be liked by the street. Hindustan Zinc, Vinati Organics, Shree Cement and ICICI Bank. These are some of your top gainers from the overall market setup right now. On the losing side, GRSC, Amber Enterprises, Mazgaon Docks, Aditya Birla Real Estate. These are some of the names that you're watching out for on the downside today.
Absolutely, and a lot of stocks on the downside, like Anisha said, that you have Zomato numbers that will be hitting on your screen. And Zomato, let's see where that one is shutting shop. Is shutting shop lower by about 3.5% or so. The profit is coming much lower than what the street was anticipating for Zomato. They've approved a QIP of around 8,500 crore rupees. So let's see how the stock will react tomorrow. But if you talk about the banking players, then you have SBI that's under pressure, you have IndusInd that's under pressure, RBL Bank, all of them actually under pressure in trade today. Talking about the auto pack, you have the newest kid on the block, that's Hyundai Motor India. That one is seen a sharp downtick, 7% or 6% downtick coming in for Hyundai Motor India. Also, you have M&M, Maruti that's under pressure in trade today. But yes, Anisha, Zomato numbers below the street estimates, is it?
I wouldn't call it that. I mean, the total income has come in at around 5,020 crores in terms of the overall number coming in, and versus around 4,442 crore that we saw last quarter. There isn't any exceptional item, but the profit for the year seems to be a bit depleted at the moment. I'm looking at the consolidated numbers right now. It's throwing up a number of almost 237 crore. Sorry, that's a profit before tax number, but profit for the period is 176 crore, and that compares with 253 crore rupees that we had seen last quarter. Last year, of course, this number was a bit lower. Last year, this number was 36 crore. So from there, we have jumped up to 176 crore. Not a big element of other income, not a big element of exceptional item right now, but there is an other expense that seems to have shot up a bit. So the other expenses have gone up to 830 crores versus 677 crore that we had seen in the quarter gone by. And last year this number was around 530 crore. So ET Now poll had thrown up a number of profitability of 260 crore. The actual profitability has come in at 176 crore. That seems to be coming in from the fact that the other expenses have gone up, because I don't see any other material miss, at least at the first look. So overall, that's the pain point. We'll have to try and dissect this number a bit more. And of course, the shareholder letter that comes out later, that tells you the breakup in terms of what Blinkit is going to be like, what's the other internal and what's the way forward. But you can watch all of that after this very short break as we carry forward the news break on ET Now on the other side.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.